Our comments today may include forward-looking statements, which are subject to significant risks and uncertainties that could cause the company's actual results to differ materially from management's current expectations. We have no obligation to update any of the information discussed today.
We're excited to hear from the clear leader in fabric and sewing and arts and crafts innovator, Joann, founded in 1943, market cap 500 million. I'm Cowen's new platforms, retail, and luxury analyst. It's Oliver Chen. I'm excited to host Joann at the Shareholder Equity Conference. Wade Miquelon is president, CEO, and chairman. He was formerly at Walgreen and Tyson Foods, and he also spent several years at the Procter and Gamble Company and was based in Europe, Asia, and the United States. Matt Suits is Joann's chief financial officer. Having previously served as Joann's COO and CIO, he comes from a background in auditing and currently serves on the board of directors of the United Way of Summit. Wade, it's great to be here with you and Matt.
Thank you. Thank you. Appreciate it.
Wade, we'd love an overview of Joann and if you could discuss some of the progress you've made since going public last year. Congratulations on that.
Thank you. I really appreciate it. You hit a lot of the salient points. The company has been around since 1943. We were a public company, and then we were took private in 2011, and about a little bit over a year ago, we went public again under the ticker JOAN. We have about 850 stores, a budding and growing online business. 50% of our sales, more or less, are in the kind of the sewing sector, fabric and sewing. Accessories and the like, and the other half would be in the arts and crafts, as well as a seasonal part of the business. We had a really a huge kind of blowout year during COVID. As you may recall, a lot of it was not only the stay-at-home phenomena, but there was also a lot of people coming to Joann to make PPE to kind of help with the shortages, especially initially. As that's waned, we've been able to garner a lot of new customers, which tend to be younger, tend to be more diverse, tend to be, have more children, tend to be actually a little bit more affluent. And that's an exciting part of our journey as we go forward. The company, we kind of like to basically define our strategies in a couple different buckets. One is really what we're doing in the core, what we're doing to bring, better assortments to our stores and our customers, to what we're doing to develop our own brands, what we're doing to refresh our store experience and make it really differentiated and make it pop. What we're doing to become better operationally. And also part of the core is really Omni, which has now grown from being just, a few years ago, about 4% penetration to, pretty much being, in the low to mid teens now as we move forward. So we've really been able to blow that business out. In fact, versus the pre-COVID baseline, we're well over double the size and continue to grow there. On the other side of the house is what we call our Blue Ocean initiatives. We've got several initiatives to really go after new profit pools, leveraging what we do and do best, but making sure that we're able to get new pools of growth. And many of these are really, I would call, asset light. So that's we've announced a few of those, and maybe we'll talk more in depth on those. But we're taking our tail internationally. We launched 6 months ago our assortments internationally, and we're now in well over 50 markets and growing. We've launched an initiative with 50/50 with Singer, which we call the Ditto, which we think is going to revolutionize sewing and how that gets done, not only in the US, but across the world. We've also launched a wholesale initiative that we think is going to take advantage of what we have to offer beyond our four walls to various different channels in the US and ultimately broader than that.
Sounds very creative, and from a deal structuring point of view and channels and international. So in the industry, Wade, how is Joann differentiated from Hobby Lobby and Michaels, for example? You're very strong in fabric and sewing. How do you see that market share evolving relative to arts and crafts?
Yeah, that's a great question. Our market in total, as we define it, is about a $44 billion market, more or less, sewing, arts and crafts, and seasonal. The three players that I would say are really specialty, all in dedicated to it, are the ones you mentioned, us, Michaels, and Hobby Lobby. So, from that standpoint, the three of us, again, we're highly focused on it, but we're, more or less probably a third of the total market, because there's lots of convenience plays, lots of different niche plays in the market. I think the key point of differentiation for us is maybe actually twofold. Now I think Blue Oceans will actually change that over time. One is just, when it comes to really the sewing part of our business, we're the clear leader. We have, more or less a third share. No one would really come close in that regard. But again, that's been a focus of this company ever since our inception. We think there's an opportunity to keep building share. But in terms of, what these customers want, the true avid sewists and enthusiasts, they want the huge breadth of our assortment. They want the expertise in our stores. They want the counter experience. And so, we're very well positioned there on that side and very well differentiated. The other thing I would say is that we, in terms of our overall assortment, we have, the broadest overall assortment. And so for many of these, customers and enthusiasts, that's very, very important, because they're not just a sewist, or not just a painter, they're actually creatives, and they're using, multiple kinds of medium to do multiple kinds of projects. So when we have our larger stores, we don't feel anybody can touch our breadth of assortment. And on our online offering, we feel no one can touch the breadth of assortment. I guess having said that, the last thing I would say is we're renewing the store experience. We'll probably get to that later on as well. In our store refresh experience, we believe we've really stepped out of the traditional sewing arts and crafts channel into something very unique for the customer, and we're getting paid for it. But we think that's probably a longer term point of differentiation that's going to be very, very strong for us.
Wade, what's happening with new customers and new platforms and the industry at large, as you become more and more attractive to younger customers as well?
Yeah, well, for sure. With COVID, we got a jolt in many new customers as many people entered into the arts and crafts phase. Many people became, sewists, knitters, and other, painters, and we got for sure our fair share and more. I believe our total database over the last 3 years of customers has gone up, I think, over 40%. Again, they skew, younger, more diverse, more affluent in general, more families. So it's a good phenomena. All the data we see is that, people are going to be, sticking with their new love, their new hobbies to some degree. So that's, I think, very positive. And there's also positive underpinnings too. You're familiar with platforms like Etsy and others where you can make to sell. Used to be people could make, go to a fair, put up a card table and try to sell a few things to a few people. Now you have, an audience of hundreds of millions of dollars through Etsy, eBay, Facebook, Instagram, and the like. And that's a lot of our customers. So about 25% of our people are making to sell. I think that number is only going to grow. These are people that are, in their kitchen with maybe a Cricut machine or a sewing machine, and they're trying to earn a little bit extra income with something that they love. And this trend, I think, is only here to stay as well. And I think we can be a benefactor given our
yeah. I love the Cricut. I have the Cricut. It's a great device. Matt, what about your growth framework? What should investors know about your algorithm and also your capital allocation priorities?
Sure. Thanks, Oliver. One of the things I'll emphasize as part of that is something Wade mentioned, which is our store refresh program. So certainly part of that is we are refreshing the experience in our stores, and that's going to drive really our core growth. And I'll get into what we see as our algorithm there. But another key opportunity we have is over time, we've acquired a lot of our locations, and those locations were acquired from companies that were primarily sewing concepts, not so much arts and crafts and seasonal, which we've added to those locations as we've acquired them. The opportunity, though, is a lot of those are undersized relative to our capacity to drive sales in our key markets. So we will end up relocating about 25 to 30% of our store locations as part of that refresh program over the next 6 to 8 years. So as we do that, we'll actually grow square footage while keeping our store count relatively flat. We'll grow square footage about 20 to 25% over that time. So if you look at that combined with what we see as opportunity to expand our e-commerce business, and then also these blue ocean opportunities that Wade mentioned, we see our revenue growth potential longer term at about 2 to 4% per year, potentially expanding beyond that should some of these blue ocean opportunities really take off. Based on our ability to drive margin and control costs, we would see EBITDA growing at kind of high single-digit percentages and EPS growing in kind of the mid-teens longer term. So if we look at that and what we need to do to deliver shareholder value, and continue to drive those strategies in terms of capital allocation is obviously we're going to need to invest in that store refresh program and our omnichannel and other digital capabilities. The way we look at that is we see probably about a $60 to $80 million CapEx allocation on an annual basis. If you look at our ability to drive cash flow, which has been very strong, and we continue to view that opportunity as strong into the future, we feel we can do that, support our dividend and other shareholder returns, which we just took our dividend up, announced that we took that up by 10% this coming quarter. We feel we'll be able to do that, do some modest share buybacks to control against dilution, and then continue to delever. So our longer term goal in terms of a leverage target is 2 times EBITDA. We currently sit at right around 3 times. We have some headwinds I know we'll get into. I suspect we will around current ocean freight costs. But once I think we get through those, we see an ability to drive to that 2 times lever target in the relatively near future, probably the next 18 to 24 months.
Matt, that does dovetail well into what we're seeing in the marketplace now with inflation and supply chain. What are your thoughts in terms of, what your customer can or cannot digest and what you're seeing with inflation as well as freight? It's an industry-wide issue for sure.
So maybe I'll take that. Obviously inflation is hitting everyone. And I think the real question is whether or not it's, structural, whether or not it's going to settle back. And fuel is obviously a huge part of that. It's a major feedstock that goes into almost everything. Transportation is also, a huge feedstock, and ocean freight in particular has been, under incredible duress. So from our customer point of view, typically what I would say is that we do very well historically in kind of a recessionary environment, and we'll see if that's on the way. One of the reasons is that people will, defer sometimes, big purchases, trips and the like, but they'll double down with the activities that give them peace of mind, like sewing and knitting and making for others. And we have seen that. I mean, our average basket is around $30 purchase, 5-6 items. So it's the kind of thing that, and I think we saw it during the pandemic, right? You see that people kind of go there for peace and for things to do. So we'll see. I mean, having said that, I don't think anybody should be rooting for, long-term inflation or a recession. We have had great momentum since the start of the pandemic. We did announce on our call a few days ago that really since the war started, circa 3 weeks ago, we have seen call it, I think we set up about a 5% shift down. I can't say whether it's related to, maybe gas and the squeeze there or the war in Ukraine. I think it's probably both. We have a customer that like many people have a customer that, that these kind of things, some people call it the CNN effect. It really bothersome for them, really worrying. And I think we're going to probably actually see that's happening more broadly as time goes by. But nevertheless, we feel, really good about our core customer. We know that we've only grown in importance. We know that this is the kind of thing that they do when they want to be able to have peace. They want to be able to feel good. They want to show people that they love them. In fact, 70% of what our people make, they give to other people. And a huge percent of the time within that, they give to charities. So, like anybody, we have to ride out inflation and make sure that we're covering it on all ends, both from a COGS point of view, as well as a labor point of view, as well as a transportation point of view. I think we've done a pretty good job of that so far. And we've had to take some price increases where necessary, but in aggregate, we manage for gross profit dollar growth. And we're trying to make sure that we balance pricing, but also momentum and also gain shares, because we made a lot of gain shares the last few years, and that we don't give those up as we ride through the back end of this.
Yeah, very helpful. And these aspects of community are so important. Wade and Matt, what about your Omni business? What are key priorities there? How quickly is it growing? How do you define Omni, to drive a connected customer experience?
So our Omni business has gone from, about 4% penetration to, like I said, in the teens over the past 2 years. So it's a sizable business. Let's call it, $300 million and change. We think we've got a lot of opportunities to do several things. One is we're putting a central fill capability into Columbus. We're bringing it up now, which is going to help us take some of the load off of our stores and how we fill Omni. because right now, most of our omnis are filled from stores. So being able to do more of that centrally will do two things for us. Number one is we'll be able to reduce or improve our line fill rate. So that's going to give us a lot of extra sales. The second thing we'll be able to do is we'll be able to reduce the split shipments. Right now, we split ships on about 40% or more of our product, but that's very expensive, especially these days with freight. So bringing down that number will help. We're also going to be able to do a lot more long tail and third party, which just basically means that we're going to have even more, than our 220,000 SKUs, which is actually important because in many of our segments where we're, number one or number two, the opportunity for us is going to be tiering up in some of the items that don't make sense to sell in every store, but make absolute sense to build on our equity and our halo to sell centrally. So we're excited. We don't really see it as another channel. We see this as part of the overall value proposition. Our customers ping back and forth between online, ship to home, stores. We do a huge percent of our online at buy online, pick up in store or curbside. And in curbside, we have, really the benchmark 2-minute or less service. But it's really for a variety of reasons, and it's probably longer than this conversation warrants. The customer may choose to go to one avenue or the other on any given day. We just don't ever want to give them a reason to say no to Joann.
Yeah, that makes sense. I mean, customers really need goods for different use occasions and really can leverage multiple channels. We see that at many in terms of curbside and different needs. So some near-term questions here. The pandemic has really moved towards an endemic. What are your observations lately with all the changes that we're seeing in relation to that? And also Ukraine, unfortunately, you talked about a little bit about that in your quarter. What are you seeing with customer behavior here?
Right. So, the pandemic moving from an endemic, I think for us is a very good thing. No question that when we moved into pandemic phase, we're the benefactor again of some kind of, COVID bumps in terms of some of the stay at home, as well as the PPE making. But then there came a point, well into last year where actually COVID became an overall negative, just because so much of our business relies on what we call a reopening effect. A very large percent of our sewing business, I think maybe 40% active, is really driven by large events and gatherings, weddings, proms, quinceañeras, cosplay conventions, our special occasion, some of our sewing construction, some of our fashion apparel, all of that is driven by the reopening. We're actually seeing now that we've come out of the Omicron variant, as you got to the back end of January, we're seeing, some of those reopening businesses really explode. But like I said, on the other hand, we have seen more or less the last 3 weeks kind of a freeze in some of our customers. And, not all, but the bulk of that, kind of 5% shift that we've seen is actually not 5% kind of less from everyone. It's actually more of a traffic issue in our kind of our least valuable customers farther down the database, but it's still valuable to us. But the lesser engaged customers have been, lesser engaged since this started. And I see it with, friends and family. People just, they don't want to go out and maybe shop or go to dinner or other things because it's just a lot of anxiety. And this too typically tends to pass when we've seen in the past, like Hurricane Katrina, news cycles pass, things normalize. I think we're all rooting for an end of this, just for humanitarian purposes, regardless of the business effect. But we have seen a certain subset of customers, which is, at least for the time being, sort of dropped out of the traffic cycle. And I'm sure high gas plays a role in that.
Yeah.
But I think it's really more of what's happening in Ukraine than that, my own personal opinion.
Okay. Thanks for sharing that. What about inventory? The name of the game in retail is really the right stuff at the right place and the right time. And also thinking about the advancements we've made in pricing and pricing analytics and planning and analysis and geographic level pricing. So what are some of your tools to manage inventory and how might this interplay with margins?
Yeah, I can take that one. So one of the things I start with in terms of inventory is really going back to the supply chain. I would call it a crisis in terms of what's going on with international supply chains. What's been going on since really the middle of last year, and it's certainly, still with us. One of the things I think that's been a key reason why we've been able to deliver very solid sales trends in the face of all that is we just made a commitment to get the products here that we need to. And that's certainly come at a cost. And we've talked a lot about what those costs are and how we're dimensionalizing those and trying to determine to the extent those are, we feel, transitory or will normalize to some reset base level. But saying all that, we sit in really very good position in terms of having inventory to sell and working with our key suppliers to make sure we stay that way. Now, looking at that, certainly we're also experiencing inflation and cost around the products themselves and the supply chain to get them to our stores for our customers to buy. So we have taken a look at pricing, and we've been kind of rationally, I would say, optimizing our promotions and discounts. We're a very high-low model, so our customers are very accustomed and definitely are in favor of our ability to deliver coupons and sharp promotional discounts over time. We've been very successful over the last year and drove really substantial growth in our margin rates by really getting a lot smarter about how we approach that. And we've also benefited, what I would say, from what's been a very favorable environment competitively on that as well. So we utilize a lot of tools, some deeper analytics that allow us to understand elasticity in terms of unit sales velocity as we make different decisions around pricing and promotion. We'll continue to leverage those abilities and do a lot of test and learn. We have things where we'll run promotions in certain markets, take pricing in certain markets, have a holdout market, and statistically analyze what that does in terms of consumer demand. So we'll continue to leverage those tools and optimize. And again, what's been a challenging environment in terms of procuring inventory, but I think it's been a somewhat favorable environment in terms of our ability to price more rationally.
Thanks for that, Matt. Wade, there's a lot of other cool stuff happening, a JV with Singer and also a wholesale partnership with JDM and acquisition of WeaveUp. Could you touch upon these different aspects and how they fit into your growth strategies?
Yeah, absolutely. The first one, we have a 50-50 joint venture with Singer Viking Pfaff worldwide. It's based on, we spent the last 3 years at Joann developing a product. We bought the patent rights. We filed additional patent rights. We've hired a top design firm to really perfect a device which we call the Ditto. It really revolutionizes sewing. If you think about sewing, and yes, sewers, the number one pain point, the number one reason they don't sew more is they don't like the process of finding a pattern, cutting it out, pinning it, cutting out the fabric. It's very cumbersome. It's clunky. It's kind of like, painting off your house, or taping off your house to paint. Once somebody does that, give me the spray gun. It's fun, but it makes sewing not fun and very difficult. And also, people don't have access to patterns necessarily if they're not in proximity of a Joann or something like a Joann. So effectively, what you can do is you can go on your mobile device or in your screen. You can pull out a pattern. You can pick the size that you want. It actually has an AI tool where you can either design your own dress, your own pants, your own whatever you want, infinite choices. Or you can take an established pattern and you can, modify collar, cuffs, change again, maybe make the top, bottom different, whatever you want. And then the laser projector projects onto the fabric, and with a rotary cutter, within a matter of minutes, you can cut out all your pieces to perfection. It really changes the game. It makes everybody a designer to some effect. It gives people access to patterns everywhere. And it takes what can be a 2-hour process down to a matter of a few minutes. And importantly, it takes what was the biggest pain point in the process, and consumers now say it's the funnest part. So, we'll be, the current plan is to launch later in the calendar year, where we'll be selling, the Ditto device with the rail system and the laser printer and all the accoutrements. And then it'll be a subscription model where people also subscribe to be able to get patterns, on their device and use of the AI tool. So we're pretty excited about it. In the US, there's 60 million households, more or less, that have a sewing machine. There's 30 million that actively sew. In Europe, is very similar to that as well. So when you think about the potential, this has a very high, definitely will buy, one of the highest recorded for this kind of item. There's a big potential there for us to really change the game. But it really makes sewing, patterns, the pattern process hasn't changed since the days of Abraham Lincoln. That is true. And I think, at least relative to this industry, it's pretty transformative.
Yeah, it sounds extremely innovative, and removing that key friction point, huge market opportunity. What about the wholesale partnership and the M&A deal?
So, we have well over 200,000 SKUs, 57% are unique. which makes us, very unique in this business. But there's a real void in terms of anybody being able to provide that kind of breadth in wholesale to smaller channels, to other businesses that might do crafts or other items on the periphery. So what we've done is we've partnered with really some of the Catan family, who you may be familiar with. They're really our kind of our front end sales organization now, in conjunction with about a dozen brokers we've set up. They've got a very deep Rolodex, but basically they're working to take our full assortments, both domestically and anywhere around the world where these customers find they no longer really have great access to our items. And like I said, of our 220,000 items, 57% can't be cross-shopped. But we've got pretty good scale, and we can provide, I think, make a decent margin on wholesale and allow other people to expand what we do in selling arts and crafts and seasonal more broadly. So we've got plans to hit various different channels, and we'll talk more about that as we go by. But really, when you think about their experience, their relationships, their Rolodex, as well as our kind of arsenal of SKUs, we think it's going to be a great journey.
Wade, what do you think is most underappreciated by investors or the street in terms of Joann and Joann stock?
Yeah, look, I certainly don't want to talk for investors and what they think. I could only, and different investors may think different things too. One thing is, I think it's probably, the fact that, last year and then this first quarter, we've had negative comps because we were so high up during the pandemic. I think it's probably maybe difficult for some people to get their head around and kind of waiting to see, okay, when do we now get into a positive comp cycle and get back to that sustainable model that Matt talked about? But, the reality is, like last year we comped up, more or less 25. I think we're at 50 something in the second quarter. So, it's or the year prior. We're just, we have to round that and come out of that. And I think we will. I think also, the fact that we've been able to build margins the way that we have, I think is pretty impressive. If you look at the margins period on period, we've done an incredible job of optimizing price, building margin, even in the wake of inflation that's been flowing through. And that includes still, we got $90 million of tariffs in 2018. We still have about $45 million of tariffs in there. So that margin, expansion has been, despite that. So I think that kind of shows the power of the model in terms of being able to accrete gross margin, gross profit dollars. Probably the last piece is just to what extent this company really is a cash engine. We've always generated a lot of cash, and we have potential to generate a lot of cash moving forward. The biggest kind of thing we're dealing with right now that Matt talked about is just this ocean freight. It's many multiples of what it's ever been. This too will normalize, but, we're probably, another year away from that happening. But because we import so much, in some cases we paid up to 10 times the import cost we've ever paid. That's been a kind of really a temporary, pain point we have to deal with. But absent of that, this is a great model that has very loyal customers, that has opportunity. We're just totally discretionary. Nobody needs anything that we sell, but it's all about imagination. When we bring innovation, when we bring, excitement, when we bring experience, they're big markets for us, and it's only limited to our ability to execute. But I think, I don't know, wouldn't say specifically people are different what they're missing, but I think really it's a great space. We think that we keep raising our game. We think that, there's an opportunity to keep improving what we do, not only in the core, but that these blue oceans, any one of them, if it really hits on all cylinders, could be very, very big. But I think as time goes by, it's up to us to demonstrate, when we show what we're capable of, and as the results come in, I think that, that the value will find us, if you will, the market will find us. But for now, it's really up to us to run our plan, to play our A game. And I think if we do that, I think it's going to be really great ride for everyone.
Yeah, the execution and all these opportunities and the game-changing technology. Wade, final question. What are you most excited about this year? And also, what are you most concerned about, and any closing remarks you may have? Thanks.
Yeah, maybe I'll take it and flip to end on a high note. I think it's a very, interesting time in the economy right now. This kind of almost stagflationary environment. For us, it's almost better if it dips into a recession and then it heals, just because it, I think for a lot of people, it starts to cool off. inflation, it opens the supply chains, starts to make labor more accessible. Again, we know our customer is one who, when they have to make trade-offs, they tend to trade off and move down from large purchases, but even double down on ours. So we'll see. I just think it's a very interesting time. This war doesn't make it any better. I'm sure all of us are losing sleep about it. But hopefully this too all passes, and as things normalize, we'll get there. This is a company and a business model with incredible sustainability in good times and tough times. I think what I'm most excited about is just seeing our strategies unfold. As we move from 15 store refreshes to more than 40 to more than 70, more people see, what our best foot forward is, how we're able to get additional sales, accrete. Those things are on track or above track to pay out as our blue oceans come into the market and people start to, see the potential of these and where it takes us into new places. I'm very excited about that. So as we move through the year, we'll be closer to all of these things. And these are things we didn't just pop up overnight. We've been working most of these for 3, 4, in some cases 5 years. So we've done all the heavy lifting to make sure we understand the model. We've got the right proposition. And again, I think when it comes to market, it's going to be a very exciting time for all the new possibilities it opens up for this company.
Well, it's great to learn more about Handmade Happiness and all the initiatives you're doing across products, stores, new technology, joint ventures, and changing the business for the better. Wade and Matt, thanks for joining us today.
Thank you very much.
Our pleasure. Thanks, Oliver.
Our pleasure.